get your global voice. James Glassman, Managing Director with JP Morgan Chase, joins us live from New York. James, good morning. Thank you for joining us. Always a delight to have you back. James, for the quarter gone by, Nasdaq is up 18%, S&P is up 14%. But if I look at the profile of stocks which have appreciated in last one quarter, it is Netflix, Bank of America, Sears. Stocks which lost in 2011, they are making a comeback. What does that indicate?
Yeah, I think the general tone of the underneath the market is an economy that's recovering. It's actually doing better than people had feared in the winter. Technology is looking good. I think even in the Asian region, there are some signs that maybe things have stabilized and picking up again. So I think, in the equity market, I think there's ongoing optimism that the recovery will continue. Earnings are phenomenal. Maybe earnings growth is slowing, but earnings profit margins are at record levels. So I don't think that, despite the comeback in the market, I don't think the market looks all that expensive to people if you think that there is a recovery underway and it continues.
James, hi, morning. What about Asia? Because this morning, Asian markets are boosted by the fact that the Chinese PMI data has come in pretty robust. Do you think concerns of a hard landing were sort of overdone?
Yeah, I think so. And, Chinese, the worry that China has a hard landing doesn't make much sense to me because this is a very managed process in China. And when there are signs of things are slowing too much, the government has a lot of leverage over what takes place. So I think this news is encouraging, and it does undermine fears of a double dip. And I think it's hard to tell. Early in the year, the numbers are very difficult to read because the Chinese New Year, these numbers are not particularly smooth through that. So I think it takes a few months to get away from this before we really know what's happening. And this news is pretty good.
James, can global markets afford to ignore all the global slowdown talk, be it Asia, be it other BRIC nations?
I think the thing that I think that I see, if you think about what happened in the last year or so, the rapid growth in Asia was really causing problems, and it was forcing central banks to have to tighten interest rates. So in a sense, the slowdown in the pace of growth, it may be a healthier development because if it avoids some of these bottlenecks that were coming up, it might be a more sustainable track that the Asian region is on. So I think as long as growth remains fairly good, even if it's less than what it had been, that may actually be more positive for the region.